Hey there, welcome to my channel. Today we are going to talk about something called single entry and incomplete records. It might sound a bit tricky, but I'll make it easy to understand. We will figure out how to fix these messy records and make them look nice and neat. Let's get started. So on your screen, you'll see that we have a scenario. John is here, who is a sole trader in Nkumba Market and operates a business account at Centenary Bank. The following information was extracted from the bank account during the year ended 30th June 2023. These are the details of the bank account. You have the deposits, that's the debit side of the bank account. You have cash bankings, debtors checks banked. You have cash sales paid directly to the bank, 2-year 20% bank loan. You have the sale of ancestral land by check. Then payments, that's credit side. You have the payments to trade creditors. You have the insurance of stock, rates on buildings, salaries and wages. We have the drawings, vehicle repairs, rent on buildings, cash withdrawals, as well as the furniture. So those are the details of the bank account of John, the deposits as well as the payments. Down there you have Johnny's assets and liabilities summarized as follows. So they are giving you the assets with their opening balances and closing balances. So John has vehicles, furniture, stock, the trade debtors and creditors. He has prepaid insurance, accrued insurance as well, then bank and cash. When you look at the details about assets and liabilities, you'll see that for some assets you have the opening without the closing balances. For example, vehicles, furniture, you know the opening balance, but you don't know the closing balance. When it comes to bank and cash, we have the opening balances, but we don't know the closing balances. The closing balances are missing as at the end of there, as you can see. We have some additional information as well. Cash withdrawn from the bank was committed as follows. Payment for purchases, 2.6 million. Payment for salaries and wages, 2.4 million. Then some cash could not be accounted for by John. It is believed that he used it for his private affairs. So out of the cash that John withdrawn from the bank, this is how we used that cash. 2.6 payment for purchases, 2.4 million payment for salaries and wages. But they are telling you that some cash could not be accounted for by John. It is believed that he used it for his private affairs. So you have to find out exactly how much cash was withdrawn. Then you will deduct the 2.6, the 2.4. Then the balance, John used that balance for his private affairs. So those will be drawings. Johnny's business is in rented building, half of which occupies for his personal dwelling, meaning that part of the building is for business, the other part is for personal affairs. So meaning that the rent and rates have to be shared. So half of the rent and rates belongs to the business, then half of the rent and rates still, that is Johnny's private life. So I see drawings there. Interest on the loan for a full year accrued. The foreign balances are also available. Discount received, discount allowed, return inwards, return outwards, and all fixed assets must be depreciated by 10% on cost value at 30th June 2023. What are you required to do? Determine Johnny's opening capital on 1st July 2022. Write up Johnny's cash book, then adjust the necessary accounts and prepare Johnny's statement of comprehensive income and the statement of financial position. So when you try to look at all the details, you'll see that a lot is missing. John is not keeping proper books of accounts. the records are incomplete. John is using the single entry accounting, so meaning that we have to see how we can come up with financial statements from these messy records. When I talk about single entry, I'm looking at recording only one side of a transaction in a single journal, either a debit or credit. You will not see the double entry system here, because due to the fact that most of the information is missing. You don't know the closing cash balance and bank balance. You don't have the figure for sales. You don't know the total purchases John has made during the year. So most of the transactions have not been recorded, and all what we have is inaccurate. So the search information, of course, it's going to be very difficult to track Johnny's performance, but we are going to see how we can use the available information to come up with the financial statements of John. Of course, converting now to double entry, it's going to be a bit time consuming because of the records we have, but here we are going to see how to come up with the information we need. Now, determine Johnny's opening capital on 1st July 2022. Yes, we have these records, but we even don't know the capital as at 1st July 2022. But we can arrive at this capital due to the fact that we have some information about assets and liabilities at the start as well as at the end. So if I'm looking for opening capital, I simply need to use my assets and liabilities at the start. From the accounting equation, assets equal to liabilities plus equity. So if I have the balances of assets, I have the balances of liabilities, it's very easy for you to arrive at the opening capital. So opening capital in this case will equal to the assets at the start minus the liabilities at the start. So look through that information about assets and liabilities, list your assets first, minus the liabilities, and I assure you the figure you come up with that will represent Johnny's opening capital. So vehicles, furniture, stock, trade debtors, prepaid insurance, cash, those are assets. Trade creditors and bank, those are liabilities, because you see your bank balance as at the start is in brackets, meaning that there is a bank overdraft. So let's see how we can now come up with Johnny's opening capital. Let us see how we can come up with Johnny's opening capital. So on your screen, of course, you see we are determining Johnny's opening capital as at 1st July 2022. Vehicles, 10 millions. Vehicles, that is 10 millions. So you come up with those assets first, you list them one by one. Furniture, that is 5 million. Stock, that is 2 millions. Trade debtors 5 million. Prepaid insurance, that is 200,000. You're using the balances as at the start, 1st July 2022. Cash, 10 millions. Cash is 10 millions. So I need to get the total of these total assets. Need to get the total of these assets. So we have 32,200,000. Then I will list liabilities. Under liabilities, we have the trade creditors valued at 3 millions. Then our bank is 4 millions overdraft, because you see the balance is in brackets. So meaning that I can now arrive at my opening capital. And how do I arrive at that opening capital? I'll get the total assets, we minus the two liabilities, then we come up with 25,200,000 as your opening capital. So that is part A of the question. You simply get your assets at the start minus the liabilities at the start for you to arrive at the opening capital. That is in case it has not been given to you. So that is part A. That is Johnny's opening capital, 25,200,000. So part A of the question has been answered. Now we need to look at something else. Write up Johnny's cash book. So we are going to come up with Johnny's cash book. Remember, we have cash transactions as well as bank transactions. You have discounts received as well as discount allowed. So if I have discounts received and discount allowed, and then cash and bank, the most suitable cash book format we can come up with, that is the 3-column cash book. So I'm going to come up with 3-column cash book. Then we see the transactions through the bank, cash transactions, we enter them in the cash book of John. So here I have the layout of Johnny's cash book. What I have to do now is to fix in the figures one by one. When we try to look at the assets and liabilities, the opening and closing balance, already you have opening cash balance, that was 10 millions, opening cash balance 10 millions, so I debit that. My bank balance is a negative, so that will appear on the credit. It's a bank overdraft of 4 millions. Bank overdraft of 4 millions. Now the next thing which you have to do, look at the bank account extract. You have those deposits, copy them, enter them in your cash book, debit column, on the bank column of the cash book. So we see there were some cash bankings, some cash was banked. Of course, that is a contra entry because it affects your cash and bank at the same time. So bank, cash was banked. So that is 5 millions. 5 millions were banked, but don't forget this is a contra. That's why you see a capital C in my column for the folio. It means that I have to go on the opposite side, bank, as the details, then I show that we banked some cash, 5 millions. So cash increases, then the bank account. Cash reduces, but then your bank will increase. Then on the debit still, there is some amount of money that was collected from the debtors. John collected the money from the debtors, and John collected 40 millions from the credit customers. So we debit 40 millions. Then we have cash sales that were paid directly to the bank. So you record that in the bank column. That is 4 millions. 4 millions. Then bank loan. That bank loan, that is 10 millions. According to the question, bank loan is 10 millions. Just to confirm, bank loan is 10 millions. Then sale of ancestral land by check, 2 millions. Sale of ancestral land by check, 2 millions. All these are bank deposits, 2 millions. All those are 2 millions. Then on the credit side, those are the payments. Now the payments, credit side, bank account. Get all these, take it to the credit of your cash book, bank column. So let's see how we can do this. This is my cash book. I'm in my cash book. The creditors were paid 20 millions. So you enter that. John paid insurance, that is 1 million. So enter that. Rates on the building, 3 millions. Then we have the salaries and wages, 1.5. Then drawings, 500,000. Then repairs, 1 million. Repairs, we have 1 million. Then rent of the building, 2.5. Then furniture, 2 millions. Furniture, 2 millions. That is the credit side of the bank, or credit side of the cash book. All this now has been entered in our cash book, bank details, deposits as well as payments. So far that's our cash book. But remember, we also have some cash transactions, as we are going to see. So you get all the cash transactions and you enter them in your cash book. What are the cash transactions? Cash withdrawn from the bank was committed as follows. So John withdrew some cash from the bank. John withdrew some cash from the bank, and that was committed as follows. How much was withdrawn? We need to find out that. How much cash was withdrawn? We need to find out the cash. The cash withdrawals, you see, it's 8 millions. Cash withdrawals, that is 8 millions. It's 8 millions. Cash withdrawals, that is 8 millions. Cash withdrawals, we have 8 millions. I think I not yet recorded this, but furniture, drones 500, we already entered this. Then cash withdrawals 8. I need to record this on the credit of our furniture is supposed to be 2 million. Then that 8 million is a contra, the cash that was withdrawn. So our bank reduced simply because of that withdraw. Of course, you come on the debit, cash book, bank, then you record that the cash column. Cash was withdrawn from the bank. So cash increased, but then the amount of the bank account reduced. Now, how did they spend the cash that was withdrawn? Payment for purchases. So John made some purchases and paid cash, that is 2.6. So I have to show that on my cash book. The purchases, 2.6 cash. Purchases, 2.6 cash. 2.6 cash. Remember, 8 million has been withdrawn. Now we are showing you how John used that money. So purchases, 2.6 cash. Okay. Then out of the 8 million, payment for salaries and wages 2.4. So John also paid salaries and wages in cash, 2.4 out of the 8 million that were withdrawn. Salaries and wages 2.4 cash, 2,400,000. Then what about the balance? We need to find out how we use the balance. Okay, 2.6 plus 2.4 out of the 8, that is already 5 millions. And some cash could not be accounted for by John. It is believed that he used it for his private affairs. Those are drawings. Out of the 8 millions, we have seen that 2.6 was used to pay for the purchases. The 2.4 was used to pay for the salaries and wages, meaning that 3 millions, that was money which John used for his private issues. So those are drawings. So drawings, you also have cash drawings of 3 millions. So have cash drawings of 3 millions. So that is your cash book. I think I've entered everything. Oh no, you have the discounts. we have discount received of 1.5 and then discount allowed of 500. Since I'm using a 3-column cash book because of the discounts, I can also enter these discounts that on the payment of the debtors there was a discount of 500, so I can also enter that. When we are paying discounts, when the debtors we are paying, we allow the discount to them of around 500,000. So on the debit discount allowed column, you put that 500,000. Then on the side of the creditors, when John was paying the creditors, he received a discount of 1.5. That is a discount received 1.5 from these creditors. So you can also enter that in your cash book. So probably you can come up with a 2-column cash book or a 3-column cash book. Since I have the discount received and discount allowed, you can come up with a 2-column cash book, as you can see. So now that is our cash book for John. What I have to do now is to balance it up. Need to balance up this cash book, and then we find out the cash and bank balance as at the end of the period. Cash and bank balance as the end of the period. So cash book, trying to balance it. Trying to balance up the cash book. Then we see what we can do next after the cash book. Discount received have 1.5. Now for the cash, of course, when try to look at the debit side. Okay, let me first try to add, and you'll see what we have here. The credit column, credit side, cash column. You have 13, so the debit side is bigger, so I'll put here 18 million as my total, but then there is a balance carried down, which will be 18 millions minus 13 millions. That gives us a balance of 5 millions cash. Our cash balance is 5 millions at the end of the year. There is some cash at hand, around 5 millions. Then for bank, we first find out the total for the credit side bank column. That's 43.5, so still the debit side is bigger. So meaning that to get my balancing figure in the bank column, I'll get the 61 millions minus the 43.5 total, giving us 17 millions 500,000. 17 millions 500,000 as your bank balance as at the end of the year. So that is Johnny's cash book. As you can see, that is Johnny's cash book. So the balance carried down as at the end of the year, cash is 5 million, then bank is 17.5. That is Johnny's cash book. You can show this as balance broke down on the opposite side. This is 5 million, 5 millions, and then 17.5. So that is the cash book. That is the cash book of John. As you can see, that is Johnny's cash book. Don't forget to subscribe to my YouTube channel. Don't forget to like. Don't forget to share. And in case you have any question, please, you can share that question in the comments box down there. and thank you for watching. Now, what next? What next? What next? What next? We have cash book with no opening capital. Now, part C, add just the necessary accounts and prepare Johnny's statement of comprehensive income and a statement of financial position. So down here, I'm going to show you how to add just the necessary accounts. Of course, as you know, some information is missing, so we need to use the available information, and then we'll see how we can arrive at the missing figures. We see that John paid insurance. John paid insurance during the year. When you try to look at the payment side of the bank account, there is an insurance of stock, 1 million, which was paid, but still you see that John has prepaid insurance as at the start of the year. Then you also have accrued insurance as at the end of the year. So I'm going to enter all those details about insurance in the insurance account, such that we can find out the insurance expense for the year, which will appear in the statement of comprehensive income. Insurance prepaid, that is an asset, it's a current asset. So meaning that I will enter that opening balance here, balance brought down, that is a prepaid. So I'll enter that balance first at the start of the year, that is 200,000, that is insurance. There was a payment to the bank, insurance of stock, 1 million was paid as insurance of stock. But then at the end of the year, you will see that you have balance carried down. There is unpaid. There is unpaid insurance that is accrued at the end of the year, and that insurance is 300,000. So that will appear. It's unpaid insurance, so meaning that we have to increase the insurance for the year. So this is the insurance account. This is insurance accrued at the end of the year, so that balance will appear on the debit side of the insurance account, not on the credit, because it's a closing balance, so it will appear on the credit side. Now, how much do we take to our profit and loss? Profit and loss account. Profit and loss account. Of course, we shall take the total, which is this plus this. We shall take 1.5 to the profit and loss as our insurance expense. Don't forget to balance the account. This is 1.5. Even here you should have the 1.5. Trying to balance the insurance account. And therefore, on the opposite side, that is credit balance brought down, we have an accrued insurance 300. So that's the liability, the statement of financial position. But this is what I'll take to my statement of profit and loss. That is the insurance expense that I'll take to the profit and loss as the expense. Then salaries and wages, I think you will do the same, because there was cash that was paid, cash, salaries and wages paid, that was 2.4 as per the information. Then you also have salaries and wages paid through the bank, that is 1.5. So when you add these two, when you add the two, of course you come up with the amount that you will take to the statement of profit and loss. come up with what you take the statement of profit and loss. So statement of profit and loss, you take a 3.9 there, the statement of profit and loss as the salaries and wages expense for the year. That's what you take to your P&L. Then the other account which we can come up, which we can adjust. Let me first adjust the furniture. The furniture account, there was a balance brought down for furniture. That balance brought down was 5 million. Look at the balances as at the start, but during the year they acquired an extra piece of furniture, and they paid 2 million through the bank, meaning that your furniture balance carried down, that will be 7 millions. That will be 7 millions. That will be 7 millions furniture. That is 7 millions furniture. 7 millions. 7 millions. Therefore, the balance brought down. If you balance up the account, start of next financial year, your furniture will be having a value of 7 millions. It's the balance. Which other account? Let us try to look at the receivables. Let us look at the receivables. Receivables, these are current assets. Enter their balance brought down. The balance brought down for the receivables is 5 millions. That is 5 millions. But John collected some money from these receivables. The debtors, he collected 40 millions from the debtors, so that will be a credit. Remember, in your cash book, this was a debit. Look at the cash book. So now we are trying to complete double entry. This is the cash book of John. The debtors paid 40 M. So in the debtors account, you will make a credit entry, as you have seen. Bank. Then still the trade receivables, John offered a discount allowed to these customers. That discount was 500. And you may ask, why are we coming up with the trade receivables account? The reason is because we don't have the credit sales figure, and it's like John sells some goods on credit. That's why you see that we have the trade debtors. So we have to find out exactly how much sales we are made on credit. That's why we are coming up with the trade receivables account. Then return inwards. Some customers returned back goods worth 4 millions. So, and then at the end of the year, we see there is a balance carried down for these trade debtors or the receivables, and that is 8 millions. So meaning that now when I try to use all the available information about the trade receivables, I balance up that account. Of course, on the debit you have 5 million. Then on the credit you have the 40 M. They are paying 40 millions. You offer them a discount of 500. Some return goods worth 2 million. And then the balance carried down at the end of the year is 8 million. What does this mean? It means that this John, during the year, sold some goods to these customers, but on credit. So let's try to find out the goods that were made on credit. So that will be your balancing figure. That will be your balancing figure in this account. That will be your balancing figure in the trade receivables account. That will be your balancing figure in the trade receivables account, as you don't see. So that will be 50 millions minus 5 millions, giving us 45,500,000. Those were the credit sales that were made during the year. Now I can get my total sales. Can get the total sales. Let's try to find out the total sales. Now the total sales will equal to these credit sales, which you see. So we have to get the credit sales. We have to get the credit sales. We have to get the credit sales. So my total sales will equal to this credit sales, then plus the sales that were made and were directly deposited. Cash sales directly deposited in the bank, the 4 millions. So that gives us how much? That gives us 49.5. So 49.5, that's the amount of sales that will be taken into the statement of profit and loss. I've added the credit sales, then plus the cash sales that we are paid directly into the bank, that was 5 million, that was 4 millions. So 4 millions plus the 45.5, you get 49,500,000. That is your total sales. So the trade receivables account has helped you to arrive at the credit sales, which you added, or which we have added to the cash sales that we are paid directly to the bank to come up with the total sales figure of 49.5 millions. Then you move to the trade payables account. These are liabilities. It's a liability account. So you have some balance brought down for the trade creditors. That is 3 millions as per the question. 3 millions as per the question. But on the debit, there is a discount received. Of course, you complete double entry. The discount received, you see it's a credit in your cash book. So here in the trade payables account, you come and debit the trade payables account. Discount received, that is 1.5. Then you have return outwards. John return goods back to the suppliers, return outwards, that is 1 million. Then we have the payments to the creditors, that is from the cash book on the credit side. So when you complete double entry, that will get debit in the trade payables account, that is 20 millions. Then you also have a balance carried down for the trade creditors, as you can see in the question. Trade creditors, that is 4 millions. Of course, now what you have to do, you have to balance up the account and then find out the credit purchases. The trade payables account, normally it is always prepared to arrive at the credit purchases figure during the year. So what we can do now, we can balance up this account to find out the credit purchases for John during the year. All that was missing. So total is 26.5. How much are the credit purchases? The credit purchases. That will be your balancing figure. Don't forget in this account. That will be the balancing figure. That will be the balancing figure. The account. And that will be how much? That will be 23,500,000. That is your credit purchases. Therefore, I can now also get the total purchases. Total purchases will equal to these credit purchases plus the cash purchases, because John bought goods and paid by cash, and the cash purchases were worth 2.6 millions, and that is 26,100,000. 26,100,000. Those are the purchases for John during the year. Total purchases, you have 100,000. Those are unit purchases. So that's what you take to the statement of profit and loss. I need to calculate the depreciation expense also, which I'll take to the statement of profit and loss. Depreciation expense, you also need that. Depreciation expense. Depreciation expense. Depreciation expense. What are we going to depreciate? Of course, we are going to depreciate the vehicles. Depreciate the vehicles. How do they depreciate vehicles? We are being told that John depreciates all the non-current assets 10%. So vehicles, that will be 10% times the cost of the vehicles, which is 10 millions. The cost of vehicles is 10 millions as per the question. Cost of vehicles is 10 millions as per the question. 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 That is the cost of the vehicles. So the depreciation is 1 million. Just to confirm, all fixed assets must be depreciated by 10% on cost value at 30th June 2023. So that's depreciation. Then the furniture also to be depreciated by 10%. The furniture value is 7 million. Remember, there was an acquisition made during the year. This is 10% times the 7 millions, which is 700,000, meaning that our total depreciation will be how much? It will be 1.7. That will be the total depreciation. Now what you can do, you can come up with your financial statements. We have all the information we need. The sales, we have them. Where are the sales? Sales are here. So those are my sales. I will list the returns. I also have them somewhere. Still in the trade receivables account, we see customers return back some goods. So when I list the returns from the sales, that gives us a net sales figure of how much? That gives us a net sales figure of 47,500,000. Opening inventory, I can get this from the opening statement of affairs, and that is 2 millions. Purchases, I have them. I already have my purchases figure. Where are the purchases? And get them from the trade payables down here. That is 26.1. I will list the purchase returns. I can get that from the payables account, return outwards. So you see, if you have all the information you need, it's going to be very easy to come up with the financial statements. So what will be the cost of goods available for sale? That will be the purchases plus the opening inventory less the purchases returns. That gives us 27.1 M as the cost of goods available for sale. Closing inventory, it's up there in the assets and liabilities balances. Closing stock, that is 3 millions. Closing stock is 3 millions, so we can also minus the closing stock. And when we minus the closing stock, now we can arrive at the figure of our cost of sales, which is the cost of goods available for sale minus the closing inventory, giving us 24.1. 24.1 is the figure for cost of sales, and if you minus that from the net sales figure up, you come up with what we call the gross profit. And the gross profit for John is 23,400,000. However, we have some other incomes to add. John received a discount from the suppliers. John received a discount from the suppliers, a discount of 1.5. So I add that. The total incomes should be the gross profit minus plus the other incomes, that is discount received, making it 24.9. We shall let that sale of the ancestral land, let us show it as an increase in capital, because this is a private land and the John is injecting that money into the business, so that comes as additional capital. So I'll add it to the capital in the balance sheet, so meaning that the entry for that is to debit the bank account, that is the cash book, and then you credit your capital. So let's not show it as an income because it's not from the operations of the business. So that will be some additional capital. So total income, we have 24,900,000. Discount allowed is there. When it comes to the rate and rates, what I'm going to do, the rent was 3M, so you'll get the 3M, then plus the rates around 2.5M. So you add the two, but you take a half, because half of the building is used by John for his private affairs. Then the other half is for the building. So meaning that half of the rent and rates, that is drawings, then half that is for business. So meaning that here I'll get a half. Okay, I'll just get the 3 millions plus the 2. You come up with the 3 millions. Let's get the 3 millions plus the 2.5, yes, plus 2.5. Then you divide that by 2. That gives us 2,750,000. The other half, that is drawings. This half, business. Then interest loan, the interest loan, that is 20%. It's 20% of the bank loan. The bank loan is 10 millions. Bank loan is 10 millions, and that is now 2 millions. That is 2 millions. That is 2 millions bank loan. Depreciation expense, we have it somewhere here. Depreciation expense, that is 1.7. Now we can arrive at the net profit. We can arrive at the net profit. So our net profit will be the total income minus all these expenses, giving us a net profit of 11.5. That is your net profit. So John made a net profit of 11,550,000. That is the net profit. So now what we can do, we can go and come up with a statement of financial position. Let's come up with a statement of financial position here very fast. Statement of financial position. Vehicles, the cost of the vehicles as at the start, that is 10 millions. Furniture, 7 millions. There was an addition made during the year. Depreciation of vehicles, that is 1 million as per the workings. Furniture, the depreciation is 700,000 because all fixed assets were depreciated at 10%. Current amount, that is cost of the asset, is the accumulated depreciation. So you can now arrive at your current amounts by getting the cost less the accumulated depreciation. Then the total current amount of the non-current assets is 15,300,000. Inventory, trade debtors, bank and cash, we use the closing balances. Inventory at the end of the year, I can get this from my P&L closing inventory, that is 3 million. Credit debtors, can get the closing balance from the trade receivables account, that is 8 millions. Bank, I can get the bank balance from my cash book up here. Then the cash accounts too, we can get that from the cash book, that is 5 millions. So your total current assets is plus the trade debtors plus the bank plus the cash, that gives us 33.5. Total assets, non-current plus current, that gives you 48,800,000. 48,800,000. 8,800,000. 800,000. Okay. So now let's go to the last part. That is, let's move into the part of equity and liabilities. Capital at the start, we have the capital at the start, that is 25.2 millions. Then we have some additional capital, that is sale of land. The sale of land, John sold ancestral land and added in more capital. The business, that was 2 millions. I get that from the cash book. Sale of ancestral land, 2 millions. So that is additional capital. Then we can also get the net profit, which is 11,550,000. We have drawings. How much are the drawings? Let's find out the drawings. I think that they always need to come up with what the drawings. There was cash drawings as well as the bank drawings. So for the drawings, I have cash. So that the cash drawings were 3 millions. John had bank withdrawals of 500. Then rent and rates, because they said that part of the rent and rates of the building was used by the business and then by John himself, and this was 2,750,000. Half of the rent and rates, because half of the building was used by John for his personal dwellings. So that would be part of the drawings. And the drawings, we have 6,250,000. Drawings have 6 million. These drawings that will be deducted, they reduce capital. Drawings reduce capital. Drawings reduce capital. Drawings reduce capital. So what will be the total equity? Let's try to find the total equity of John as at the end of the year. That will be the capital at the start plus the additional capital plus the net profit then minus the drawings that we have made, and that capital is 32,500,000. 20% back loan, that is 10 millions. That is 10 million. Accrued interest, the interest expenses accrued, not yet paid. Interest on the loan, that is 2N. Accrued interest, that is 2 millions, not yet paid. Accrued insurance, that insurance, just look at your insurance account, 300,000. Then the trade creditors, their closing balance is how much? 4 millions. 4 millions. So when I add this, that gives us up to current liabilities. Now what you have to do is to get the total equity plus the non-current liabilities plus total current liabilities, giving you 48,800,000. So that is your balance sheet for John. As you can see, that's how it should be. It's the balance sheet of John. This is the statement of comprehensive income. Those are John's financial statements. So that's how John has performed. This was the opening capital as per part of the question. This is John's cash book. As you can see, that is John's cash book. He has some cash at hand, then some cash at the bank. Then we have the accounts that have been adjusted to come up with the amounts we need to present in the financial statements. Insurance as wages, trade payables, furniture, trade receivables, depreciation expense. So that's it. Questions about single entry are always a bit tricky, and I believe the practice you can master the technique for arriving at the missing information, and when you get that information, you can be able to come up with financial statements for any single entry and complete problem. So practice is very, very key. Thank you for watching. Don't forget to subscribe.